Welcome to InsurTalks with industry experts. Today, we have Mr. Steve Tunstall from Singapore, CEO and co-founder of Insure.com. The Inzsure platform is designed to transform the global commercial insurance industry by providing SME customers initially in Singapore, Malaysia, and the Philippines. Steve has over 30 years of experience in owning, running, and future-proofing companies. He has been CEO, Managing Director, or equivalent in 7 companies in 4 countries, managing teams of up to 500 employees and based in Asia for over 20 years. He's also contributing author to the InsurTech book and author of Risk and Asian CEO, published on Amazon Kindle in 2016. He has deep domain knowledge in InsurTech, FinTech, commercial insurance, compliance, risk, and crisis management. He has been featured in the top global influencer lists of Rise, InsurTech News, Richtopia, and Analytica in areas of InsurTech, FinTech, and blockchain. Mr. Steve, a very warm welcome on behalf of Mantra Labs.
Thanks very much. It's great to be here.
It's wonderful to have you as well. So to begin with, I would like to know your thought is that what's the magnitude of the impact of COVID-19 in small and medium scale businesses, both globally and in Asia especially?
Yeah, that's a big question. And frankly, the impact is huge and it's going to get bigger. It's not going to get easier anytime soon. Just to give a little bit more context on my background, I was the managing director of Schindler Lifts here in Singapore during SARS. That was in 2003. So we had about 400 employees then, and that was a really difficult time. And 4 or 5 weeks into the SARS crisis, we had hotel occupancies of less than 10% right across the island. And I thought the whole business was going to implode. So I've been through this before. Also, when I was the head of risk for Cathay Pacific, we went through all the prepping for bird flu, swine flu, everything like that. So again, I saw it again firsthand for a global airline. At that time, we were in 70 countries, about 150 destinations. So the same thing again, we thought this would be the big one. But this time, it is the big one. This time, we're all facing the full consequences of this. The interconnectedness of all of our businesses and the global economy has meant that this pandemic is the one that's affecting everybody in every country in the world, and there's no exceptions this time. What's the impact going to be? Well, there's sliced this 2 ways. Firstly, will be on sector, and secondly on time. So sector, already, some sectors have been devastated by this, and some of them are pretty obvious and could have been predicted. So again, as I mentioned, hotels back in the SARS days. Anything at the moment to do with the travel industry, airlines, but also providers, so manufacturers, companies like Boeing and Airbus, will they remain viable long term? Who knows? But hotels, travel companies, travel agents, anyone in that sector is having a real difficult time. Likewise, anyone in the conferencing industry who's very dependent on physical face-to-face conferencing, they're pretty well at a stop as well. Some other fallout, almost consequential and unexpected. I mean, who would have expected the oil industry to go into free fall as a consequence of this? It's sort of a double whammy for them with, super low all-time oil prices, then combined with the COVID crisis on top. That's really traumatized that sector. Some other less obvious ones that we're definitely going to see consequences for long term is anybody who's involved in global supply chains at all. I think we're going to see a complete rethink of global supply chains. Supply chains will get much shorter and they'll be duplicated. So there'll be backup built into supply chains. So the whole concept of just in time would essentially be thrown away and be replaced with more measures around resilience and backup. So again, thinking through what that actually means is going to be quite different. But if you have an SME that's in any of those sectors, then frankly, you need to completely rethink your business position now, and you need to be ready to do something completely different. And if that means closing your business, then that's what it means, because you need to work out whether you want to keep burning money on something that may never come back. These are difficult decisions, but important that those decisions are taken soon, or at least at the appropriate time. The other issue is going to be the time issue. There's a lot of interesting economics reports out there, and they pretty well all show two things. The first thing they show is that if you have a very short lockdown period, there's a real chance that the consequences to the population, to us, to humans, are very bad. And that you could cause, by having a short lockdown or no social distancing measures, you could cause a massive spike in infections. And the biggest issue with that is it massively overloads the health systems, the hospitals can't cope, and we end up with these very painful, extremely painful situations where doctors have to essentially take life and death decisions based on the capabilities and facilities that they have at hand, not based on genuine medical decision making. So it becomes a first come, first served, gets the right treatment. For most countries, that's a really difficult political pill to swallow. So as we stand at the moment, most countries are enforcing quite strong lockdowns of one sort or another. The issue with that is that the longer you do a lockdown and the more thorough that lockdown is, the more it suffocates your GDP and it damages your businesses. And there's some fairly generic information out there that shows that most SMEs in most sectors can probably survive, unless you're in one of the hot sectors I mentioned already, but can probably survive 4 to 6 weeks of that sort of pain. But once lockdowns get to 2 months or 3 months, then actually, we're already seeing dramatic reductions in global GDP. I think Swiss Re forecast already we've lost about 25% of global GDP. Once you get beyond that 2-3 month mark in terms of lockdowns, then a lot of businesses will go bust because people just do not have that sort of money to hand. And frankly, governments can't afford to bail out for that sort of period. Most global governments are already badly in debt. There's only a few exceptions to that. You can only carry on printing money for so long before it becomes a pointless task. So these are quite gloomy issues, but it's also important that people recognize the seriousness of the case, particularly business managers and business owners, and think now, what do I have to do now to pivot my business to be able to cope with this and to be able to have some sort of viable solution as we come out of the other side.
Very interesting point that you raised over here as to what business owners need to think and how to pivot their business direction. So many insurers, when it comes to insurance sector, they are now taking their distribution processes online. So how do you think that how are the insurers adjusting to this new model? And how has the customer response been? Because earlier, I mean, a lot of business used to be driven, at least in India, where agents would meet with the clients face to face. But now it's everything is virtual. So how do insurers are equipping their agents and coping or adjusting to this new scenario of business model, and how customers are responding to it? And if you can throw some light with respect to Singapore or Asian market specifically.
Sure. I think, well, this is nothing new, of course. So the transition towards more online sales is a moving target anyway. This is happening. It will continue to happen. And in broad terms, what COVID will do is accelerate this process. The issue generally, though, is it's been very patchy so far. Again, depending on jurisdiction, depending on line of business. I mean, if you take somewhere like the UK, I was reading, depending on how you measure it, something between 70 and 90% of insurance policies in the UK are already sold online. And that's before COVID. So when I was growing up in the UK, you would quite regularly walk down a high street and find an insurance agency would have a shop, or a broker would have a shop. Those are long gone. So that's totally gone anyway. That's sort of, walk in and buy some life insurance. That's all gone. In other jurisdictions, things have been much slower to change. Here in Asia, we've seen differences based on sort of line type. Broadly, if we split into life and non-life, and then if we split non-life into personal lines and more commercial insurance, which is the area where I fix, you've got sort of three broad buckets there. Life has been slow to change in most jurisdictions, and partly, there's an old adage in life insurance that life insurance is not bought, it's sold. It has to be sold. It's not something, people don't wake up in the morning and say, gosh, I'd love to buy some life insurance. There tends to be an education process. It tends to be a long sales gestation period. And there tends to be a lot of interaction between the salesperson, which is normally an agent in that industry, and the individual themselves. There have been some serious exceptions to that, and quite a few of the big life companies in the region. I mean, the biggest life company in the region is AIA. They've had quite a few different initiatives to do things in different ways, but even they are still very much dependent on the agent population. When we move to the personal lines space, so personal lines are stuff that individuals buy, so car insurance, some health insurance, perhaps some property insurance, things like that, and travel insurance. Much of those things have been online as well in different jurisdictions. And it depends where you are, again, like life. Some more wealthier economies tend to have more online stuff. Some less well-developed companies have less online. It sort of depends, though. It's a bit patchy. But personal lines, there's quite a lot of stuff you can buy in many countries now that's online. Commercial insurance, where I am, is perhaps the slowest of the three to adopt technology in any meaningful way, particularly as it relates to intermediaries. The SME space should be a good target for online insurance, but we've seen very little traction so far in Asia on that. Larger companies are even slower and still very much in most cases dominated by face-to-face interaction with brokers. But what's happening during the COVID crisis, of course, is that in all of those cases, it's pretty difficult to see anybody at all face-to-face. So everything has got an accelerant behind it now to move a bit more online. The challenge or the question will be is what will move fastest and how? My view is that this will really accelerate personal lines and life becoming online solutions for both these markets. And this is a generalization, but in my view, broadly speaking, 80% of personal line and life policies are pretty standard. Maybe 20% are bespoke and got some real interesting peculiarities that need a lot of underwriting input. But most things are pretty standard and pretty commoditized. So they're actually naturally set up to be compared with each other, and to give customers choice online is frankly the best way to do it. There is no better way to do it. Commercial lines tends to be the other way around. It tends to be 20% commoditized and maybe 80% bespoke. So it's a lot longer journey to go down. But already we're seeing a lot of SMEs sold online in the US and in Europe. And I think it will naturally follow here. Again, I'm interestingly having a lot more talks about my business. We're an intermediary for online selling of SME insurance. And some talks in particular in Hong Kong and China that I thought were stalled have suddenly fired up again the last couple of weeks, because some of the potential backers are saying, well, if it's going to happen, it's going to happen now. And I think that's true with a lot of the insurance products. The bigger issue for insurers is that, frankly, a lot of big insurers have spent years and years, bluntly holding back the tide, trying to resist online, trying to resist commoditization as they perceive it, but giving customer choice and giving customers trust and transparency is really the way to improve overall penetration of insurance. And until that trust level is built up, then I don't see that the existing insurers are going to continue to survive in the same way. So I think there's a massive opportunity. I think there will be massive change, and COVID will accelerate the change that was already underway.
Right, absolutely. As you mentioned about the SMEs and your product to help the SMEs in their processes. So since the pandemic has started, fewer businesses, fewer SMEs are seeking insurance because of the loss of cash flow. So what do you think, if you can elaborate a little bit on how your platform could help these SMEs in the current situation?
I think that the key issue is nobody needs an umbrella until it's really tipping it down with rain. When there's just a light shower or two, you can go out and you can you dry yourself off and you're not worried. But when the rain is hammering down, that's when you really wish you had your umbrella. And if you hadn't bought one, well, tough. It's a bit late trying to buy one then, because the shops are sold out. So the issue really is one, primarily, I think, of education. There's a lot of gaps in knowledge in customers' minds, and this is not only SMEs, this is many business CEOs have gaps of knowledge of what insurance should or shouldn't do, and likewise personal customers. Generally, when we look across Asia, unless insurance is required by law, it tends to not sell too well, and it's the more discerning or the more naive who gets sold insurance. And that's not necessarily a great basis on which to build your industry. I think there's a huge issue in terms of knowledge about why insurance is a good thing and why you should prioritize this. But I'm not talking about all insurance all the time. I'm talking about appropriate levels of insurance that are suitable for your business and actually tie in with the big risks that you're currently holding on your balance sheet. I mean, just because you don't have fire insurance doesn't mean you're not going to have a fire or you're not going to have to pay for it. You are going to have to pay for it. And it could break the back of your business if fire, for example, is a big risk in terms of what goes on in your business. I mean, if you're working out of a co-working space and everything's on your laptop and everything's backed up to the cloud, then maybe you're not worried about fire. But if you've got a sweet shop or a more traditional customer-facing business where you're relying on people to come in and out of that business, you lose your premises for 6 months or a year, and you've lost your business and your livelihood, and your family's lost their income. So that $100 a month that you thought was too expensive turns out wasn't that expensive after all. Unfortunately, the insurance industry, in my view, is notoriously bad at actually educating the customer on what they need. I see many intermediaries who, in the current ways of working, tend to sort of, I mean, and this is a generalization and it's not fair to a lot of good intermediaries, but I see a lot of intermediaries who truly practice the mantra that, a stupid customer is a good customer. The more they can scare the customer, the more they can sell them stuff. And that sort of mentality and attitude means that there's a lot of people who really don't trust the insurance industry. We need to work out how to overcome that, how to better educate customers. And for me, the best way to do that is to educate them online, to give them control over their own destiny so they can self-select exactly what they want. They can take advice on our platform. We have a matching tool that fits the size of their business against available policy solutions. But you don't have to take anything. You can jiggle around with that yourself. You can adjust the parameters. But it should be fairly clear to the customer that they have a responsibility to educate themselves, and they need to buy appropriate insurance to protect their livelihoods. The head in the sand approach of just ignoring the risks and hoping they won't hit isn't going to help anybody. And I think one thing that will come out as one of the small opportunities in all the disasters of COVID is that people are going to be much more focused on risk management in the future and thinking about, okay, I now have all this risk on my balance sheet. Which of those risks does it make sense for me to share with somebody else? Because if the worst happens, I'm dead. I can't cope. And those are the ones where you must look seriously at insurance as an option.
Absolutely true. Just anticipating that, I mean, and the hazard won't happen to us is not enough. So, what do you think? What are some new business models that insurance carriers are considering to meet the expectations of the life in the new normal? I'm sure, like you said before as well, that things are not going to be the same as before the outbreak of this pandemic. So more specifically, where is the new business going to come from for insurance, especially over the next 2 years?
Well, I think, again, it depends on the sector that you're in. I mean, speaking specifically for businesses and companies that buy insurance, in my career, where, I mean, I've been a customer on behalf of businesses for insurance for 30 years. And there's been some really dramatic changes in the risk profile of business customers over that time. I mean, 30 years ago, almost every business, every medium-sized business up would own their own property, would need cover for that property, and they would have machinery, they would operate out of a premises. Whereas these days, very few companies actually own their own property anymore. Most companies are operating in rented premises. Most companies have most of their data on the cloud. It's not in server rooms in the back of the building, that sort of thing. And that shift away from physical assets implies at the same time a shift towards liabilities. And it's really liabilities that are the big issue today. Whether that's the loss of your data, whether that's the risk around someone hacking into your systems and stealing personal stuff, whether that's to do with legal liabilities, have I complied with the law? Am I meeting my regulatory obligations? Is somebody going to sue me because they've tripped over coming into my office? All these different liability type issues are growing exponentially, while the traditional asset-based liabilities, property-style insurances are to some extent reducing. I mean, again, it's an oversimplification, but it tends to be that way. Now the issue with that for the insurance sector, particularly for property and casualty insurance, is that for things like property insurance, the insurance sector has 100 years of claims record, so they can model that really quickly, and they can put a price together really quickly, and it represents good value and is a fairly accurate assessment of what the loss is going to be and an appropriate premium to cover that loss. When we look at some of these new and emerging risks, it's much harder for the insurance industry to get their heads around what the potential implications are. So I've been looking at cyber insurance policies, for example, for at least a decade now. And to be honest, they're still pretty hopeless. I mean, the insurance industry has got a long way to go to produce a good cyber policy. Most policies I see at the moment are basically just covering third-party costs like legal costs and forensic costs and things like that. I mean, a few of them will go so far as to include loss of profit, but it's really limited and it's very difficult to get one of those to pay out. If you can't link the cyber event closely to a change in your share price or some other variable, it's very difficult to get a claim paid. Now, the other issue around this as well is that none of these policies are approaching anything that you might sort of, in inverted commas, called all risks cover at this stage. So if something goes wrong on a cyber event, chances are your insurer is not going to cover all of what you see as your loss. And there's very good reasons why the insurance industry can't get its head around this yet, because if you have a loss, say Amazon Web Service goes down for your building, do you know what? Every other business in the building has probably lost the business as well, and they probably all have a claim. In fact, if AWS goes down, every other business in the city probably has a claim. If not, every other business on the planet. So the accumulation risk associated with this is extremely difficult for insurers to get their heads around in a viable way. But those are the big risks that now are worrying CEOs and boards of directors. That's the stuff that they really don't have a handle on, and they can't cope with taking all that risk potentially onto their own balance sheets. The insurance sector as a whole, in my view, is not responding fast enough to be ready to deal with these risks in a meaningful way. And I think there's a huge opportunity there at the same time that they should be able to look at this more meaningfully in the future.
Very, a valid point that you raised, there's a lot that the insurance industry has to gauge upon and think about what to do next. I would like to kind of, know your opinion about technology and how technology can help in sustaining the insurance businesses, and what could be the upcoming technology trends and also what industry will expect from technology service providers. So it's a three-part kind of a question wherein what are your thoughts about technologies like maybe AI or machine learning? Can they help in sustaining insurance businesses? What can be upcoming technology trends we see post-pandemic? And what is the entire industry which will expect from the technology service providers?
Yeah, well, I think the first thing I would say is that actually all the technology that's needed to make insurers much more efficient and work perfectly on an online environment is already there. There's nothing missing. There's no extra bells and whistles needed from a technology point of view. What is definitely needed is a huge mindset change. And the mindset change is in three parts. Firstly, it's within the insurers themselves. There's a huge number of middle managers in insurance companies that I've worked with, and I've worked with about 30 or 40 now, who are essentially so scared of technology that they refuse to change their jobs at all. And it doesn't really matter what the driver is from the CEO or what the driver is from the competitors. Those guys in the middle are hunkering down and trying to protect those jobs. And many of those guys are in the IT department, by the way. So they're all basically trying to carry on doing what worked yesterday in the hope that it still works tomorrow. And unfortunately, it won't. So many of those businesses are facing huge challenges in that respect. The other big issue is that we've decided as an industry that the people who build the products should be separate from the people who sell the products. And the people who sell the products actually are people. and unless you replace those people with technology or massively augment them with technology, they're not going to be very financially attractive. Particularly when you've got savvy customers who are saying, do you know what, I'm not quite sure why when I buy your life insurance, I should pay you as the intermediary. The first 6 months of the policy premiums go straight to you and there's no benefit to me. That's such an archaic process. It's such a, frankly, dishonest process. I'm amazed anybody ever buys a life policy. So that's on that side of it. And then on the other side, you've got customers who, frankly, you know, insurance is, as I've already said, is not something you wake up in the morning excited to buy. There's no instant gratification when you buy an insurance policy. It's not like buying a Range Rover or something where you get that new car feel. There's no new car feel when you have an insurance policy. And you don't know whether there ever will be. Maybe there won't. But that then sort of breeds a sort of, you know, if you haven't chosen to educate yourself about risk management, then you've got this sense that that's money wasted, money that you shouldn't be spending. And as we've said before, you know, I mean, people always hope for the best. That's the human nature. We hope we're never going to have a problem. We hope everything's going to go well. But hopefully COVID will show us that, yes, well, we all hope everything ends well, but we should still plan for the worst. And that attitude amongst customers, whether they're business customers or personal customers, is also a huge impediment to the implementation of technology. That understanding that, you know, a lot of customers even now, and this is not just older generation, younger generation too, are going, well, do you know what? I'd still maybe like to talk this through with someone before I buy. So there's a huge education and attitudes program there that needs to be improved. I think all of these basically contribute to the lack of transparency in the sector. And that lack of transparency means that, frankly, you can have all the AI machine learning bells and whistles that you want, but it won't matter down to how much you sell unless you can deal with some of these human factors first. And the reality is, at the moment, we don't really need that stuff. I mean, we've built at Inzsure a really competent matching engine. I also have another business where I deal with one of the world's most advanced AIs out of South Africa, but I haven't worked out how to integrate it into my own business yet. And I'm running an InsurTech. So there's a lot of hype and hyperbole around AI and how it's going to change the world and make things better. But the reality is that I think for the simple process of buying and selling insurance, we're some way off actually needing that. What we need more first is a change of mindset in the industry. And frankly, you got everything on AWS, you got everything automated. This is not rocket science. This is stuff that's been done, you know, in companies for 10, 15 years now. It can be done relatively inexpensively. And you have to be careful about adding more expensive layers of technology without adding greater value to the customer, because it's relatively pointless. And we see that in other areas of the financial services sector, where actually less is more. If you can reduce your commissions down to the bare bones, if you can demonstrate to the customer that they're really getting value for money, then that's what customers want. You know, you look at the popularity of ETFs, exchange traded funds, and other things in investments. The reason they're so successful is that they get their intermediary costs down to very close to zero. People are looking for the same thing in the insurance sector. The insurance sector is not listening.
So in this, you just raised, you said how that there are people who develop products and there are people who sell the insurance products. So what do you think that if not technology, then what innovations do you see in insurance products that could happen in next 6 to 8 months, in this short period of time, which could help in adjusting to this situation?
I think one of the biggest challenges is actually the way regulators behave in each jurisdiction. I mean, I've engaged with a lot of regulators, and I recognize they have, you know, very important responsibilities in protecting customers and making sure that people are getting the right sort of solutions and critically making sure that the companies that provide those solutions are around to honor their promises so that customers get what they need when something goes wrong. And that's true in insurance as it is in all financial services. I think the challenge for a lot of regulators is that they haven't really got their head around yet how InsurTech in particular can actually make a step change improvement for customers, make things a lot clearer, a lot more transparent, and essentially, it gives the customer a lot more choice, a lot more ability to control their own destiny. So I think the relationship between the regulators and the rest of the industry is one of the things that I think fundamentally has to change if we're going to see technology improvements. And a lot of this is about protectionism as well. It's about making sure that the incumbent parties in each jurisdiction manage to maintain a slice of the market themselves, and that's very true in a number of Asian jurisdictions, that's for sure. With that in mind, if you've got that sort of protectionist system in place, and let's face it, with the behavior of USA and others at the moment, it doesn't look like that's going to get any better. It's probably going to get worse in the short term. Then unless you move things like that, the incumbents are fairly complacent. They don't see a real reason to change. If they've already got a substantive market share and they're actually increasing their sales and profit year on year in a modest way, then with their relationship with the regulators, what is the drive to bring innovation to the market? It's quite limited, perhaps. So I think, although we look at COVID as being a big trigger for change, unless the broader structures around the industry are willing to embrace that change and give better value to consumers and customers, then maybe we're not going to see much change at all. But what saddens me a little bit is that I think that's a loss for the insurance sector. I think it's a missed opportunity. There's an old expression: you should never waste a good crisis. The insurance industry should be all over this now, saying this is what you could have done. This is where you could have been. This is the protection you could all have had. But the reality is we're seeing insurers just kicking back, and I'm placing policies for some big companies at the moment, and the only thing the insurance sector is doing is making sure they add last-minute exclusions to pandemics in the future so that they don't get caught out about this again. So it's just, I find it rather depressing that the insurance sector is constantly building up the walls and retrenching itself rather than trying to grasp these innovative ideas for the future.
Absolutely. So bringing up the clauses now that you said that insurers will put in the pandemic clauses. But in the current situation, what do you think the COVID-19 will propel insurers to increase the digitization of their operations and interactions with their clients? We may also see that insurers are scaling back on their physical office networks and moving more people to remote working. More focus will fall on automation of processes for greater cost efficiencies and resilience. So what, according to you, are the crucial insurance processes where automation will disrupt first?
Again, I think it depends where you are in the supply chain, essentially. For the big insurers themselves, anything they can do with their internal processes to make them automatic, I think the better. To be honest, there's a lot of technology out there already. Again, this is not rocket science that can automate most underwriting. So most underwriting will probably be replaced by AI of some sort or other sooner rather than later. As you say, the COVID thing has all accelerated the idea of us all working at home. We're all used to that concept now, and even people who've been anti that for generations, it's tough. You've got to get used to it. And I don't think we will go back to the way we were for insurance companies as anybody else. So I think in terms of the back office functionality of insurers, we'll see that that cost pressure to reduce costs will continue and will accelerate, if anything, through this process. I think, again, it comes back to the whole intermediary process. If the intermediary process is totally predicated around having human beings instead of technology, then there's no efficiencies you can make to that. I can't quite see how agents and certain brokers are going to justify their role in the future any more than they have done now, other than they perhaps pander a bit too much to consumer needs and client needs, and clients don't take responsibility for their own decisions. So I can't see how that's going to change unless there's a real fundamental change in the way the industry interacts with customers. The other areas where I think insurers need to be a little bit careful is that actually the insurance sector as a whole is stuck with this historical business model which has worked well for 100 years. So there's this real reluctance to change it. But actually, all the fintechs that are coming through, they don't really care about that in the slightest. So I think what the insurance sector has to be very careful about is that insurance gets essentially hijacked and stolen by other parts of the financial services industry. So we're already seeing a lot of the big players like Alibaba, a lot of the fintech companies, the travel companies like Grab, Uber, some of the others, they're all pivoting towards financial services. And I think they see insurance as an integral part of that. Not so that they can go up front and say, hey, would you like to buy insurance? But so that they embed the whole thing into a seamless process. So the customer is buying insurance without even realizing they're doing that. What that essentially does is immediately causes the current intermediary process that traditional insurers are using to be completely defunct. So those companies will lose market share over time. And even if they do manage to make their back office super efficient, they're going to essentially end up as what I would characterize as dumb pipes. They'll just be capacity plays, providing capacity into intelligent tech marketing machines. And it'll be those tech marketing machines that take all the profit, not the insurers. The insurers will be just providing capacity with lower and lower margins. And frankly, I think that's what should scare the leaders of insurance companies the most, is that they'll lose even more that ability to interact with customers. And the less they interact with customers, and let's be honest, it's pretty limited now, the less opportunity they have to interact with customers in the future, then less understanding they'll have of customer needs. And they'll be even less capable of modifying their behavior to match those changes in customer needs. And the changes in customer needs are only going to get faster and faster. It's not going to slow down.
I have just a follow-up question, a small one with related to customers that we are talking about. I'm sure, like you said, you have the experience back when SARS had come and the bird flu, the swine flu, and I'm sure there were some implications, yes, implications or the impact on the insurance industry, especially with diseases. It puts a lot of pressure on health insurance sector, as there are huge claims that due to the increase in volume of claims, the insurers have to process these claims at a faster rate. So what do you think insurers need to do to speed up their claims processes, especially because I think back-end operations will have an important role in this, and technology will also have an important role in this.
No, you're absolutely right. And I think of all the processes in the insurance industry, the claims process is the most painful, and that's the one that customers complain about the most. And it's also the one that's the insurance sector as a whole seems the least likely to want to introduce technology into that process, which again is extremely disappointing and quite difficult to understand. So what has been interesting in some of the data that I've seen so far, though, is you're quite right. There will be a significant number of claims related to COVID, particularly for companies for inpatient, outpatient, and other employee benefit policies. But the data I've had so far, because I work on a couple of employee benefit captive insurance companies, it's interesting. It depends where you are, of course, but in the US, a typical COVID claim so far is looking somewhere between 20,000 US dollars and 100,000 US dollars. In Asia, we're seeing them much more at the bottom of that range, from $20,000 down. But what's an unexpected, or perhaps we should have expected it, but I was surprised by this. One side effect is that because so many medical facilities around the world are being dedicated to COVID, there's been a huge cancellation of more day-to-day type health activities. So regular visits to the doctors are now being cancelled. Regular sort of non-critical operations are being cancelled. Elective surgery has pretty well stopped, pretty well everywhere where you go. So the impact of that on some of the programs I've been working on is that we've actually got a significant reduction in claims in the first part of 2020. And it looks as though some of that will come back. So the way we're doing some of the forecasting on these captives at the moment is we expect a little bit of a surge in Q3 or Q4 2020 as some more claims come back in. But actually, a lot of those medical visits or non-essential treatments, those are never going to come back. They're never been replaced. So it's actually, on balance, may mean that the total claims performance overall, on certainly on the big policies I've been looking at, this could be a silver lining that for 2020, those policies will perform better than usual. This is from a customer perspective, of course, in terms of large companies who are buying those policies. So that's a sort of an unexpected outcome, really, that there's actually less medical claims at the moment because of the COVID situation.
Absolutely. Thank you for the wonderful insights. With this, we come to the end of our interview. Thank you so much for sharing your taking your time out for us and doing this interview, sharing your wonderful insights, which I'm sure would benefit audience at large. Thank you very much. It was a pleasure having you.
No, it's been really great. Thank you for the opportunity. I appreciate it.
Thank you so much. Have a nice day.
You too. Bye-bye.
Bye-bye.